All of the major semiconductor stocks are deep in correction mode. That is down nearly 20% over the past month. We'll point out some buying opportunities when we get to the technical segment of the show. There's certainly some areas literally on Monday where you can step in here and buy the dip on some of these if you believe that the trends and the revenue is going to continue to flow for the semiconductor industry. We had some big news last week. We'll dissect Supermicro Computer's earnings. We'll take a look at their conference call as well. They say some very important things because their number one suppliers are NVIDIA. We'll talk extensively about Blackwell, NVIDIA's GPU release. We'll give you some headlines and also some details on the delay there. We have to also talk about Intel as they've completely fallen apart. We'll talk about, is Intel at risk of actually going bankrupt? We'll actually have to talk about that. We'll talk about how all of this benefits one company, really, Advanced Micro Devices, and we'll talk about one of their new product announcements, and then obviously we'll get over to the technical segment. What is going on, everybody? Hopefully you guys are doing well out there. This is Semiconductor Show here on Equity Empire, currently airing on Sundays. I think once the NFL season starts, though, we'll start putting this out on Sundays. Now, the broad-based semiconductor ETF, the SOXX, SOXX, tell you what, over the past month, it's down nearly 19%. We'll show it technically, though, could be finding some footing. The granddaddy of them all, NVIDIA, is down 21% over the past month. AMD also down 24%. It's been a massive slide for a lot of these stocks. Some have held up a little bit better than others. Taiwan Semiconductor holding up by about 10% declines over the past month. And Supermicro Computer, which reported earnings this past week, is obviously one of the high-flying stocks in the sector, had massive gains, still year-to-date up 78%, but over the past month is down 45%. And after the company reported earnings, it really didn't get any better. I got a lot of comments on my other channel where we dissected the earnings. You know, a lot of people have bought into this one at a much higher price. Shares of Supermicro Computer were once at over $1,200 per share. Obviously, at that time, a lot of people kind of pile into these names when they're high and they're high flying and they get a lot of news and a lot of attention and they wonder what they should do. I tell you what, you got to have stop losses on this one. There was a clear area of support at about 780. We'll show it to you when we get over to the technical segment of the show. There was clear area of support. In fact, we had it marked out on our chart right here at about 740. You could even push it up to about 780. You didn't want to break that because once you broke it, it's look out below on a stock like this. Now, Supermicro Computer does suffer, though, from rising expectations. This is very much like an athlete. A lot of you might have bought Supermicro Computer maybe a long time ago, maybe not even that long ago, maybe back in 2023, and it had its epic rise. That's almost like prospecting or being a fan of a rookie or a team that is on the rise. The problem is now Supermicro is a superstar. It is expected to deliver. It's like LeBron James. A lot of people hate on LeBron James, even though he's accomplished a lot in his career, and that's what's happening with Supermicro. They came out with a quarter with 143% year-over-year revenue growth, up to $5.3 billion. They also gave us really actually better than likely expected guidance. Company expects $6 to $7 billion in the upcoming quarter. That will be their fiscal Q1. The consensus at the time, and that's the key here, at the time was for $5.45 billion. Now, when we look at the expectations for the Q1, Wall Street's expecting 6.22. So understand with these companies, and we'll look at this when we get to Intel, analysts are always multiple steps behind where a company is going and where they have been. We finally saw analysts downgrade Intel when the signs to downgrade Intel have been apparent for at least 2 to 3 years. They only downgrade well after the fact. Same thing with Supermicro. You get those upgrades after the fact, but by then it's too late. So the company gave out pretty strong revenue in the quarter, beat expectations, or more or less met expectations. Where the company struggled a little bit, and we highlighted this quite a bit, is the fact that their gross margins are absolutely disintegrating. And we'll talk about on the conference call some of the reasons why. But I do want to illustrate this, the rising expectations for Supermicro. This graph represents consensus revenue trend. You notice back in 2023, they were only projecting $3 billion in revenue. And then as the company continues to deliver, well, those expectations get higher and higher. We talked about when the company announced their Q4 results, revenue expectations for the upcoming quarter were only $5.45 billion. Now they're $6.2 billion. The following quarter, 6.5, and the quarter after that, 6.6. And these will likely continue to rise in the coming weeks ahead. Again, you see the 1 month, 3 month, and 6 month trend all green as the expectations continue to rise over at Supermicro. Now, one of the reasons why you definitely want to pay attention to Supermicro, whether you want to invest in it or not, might be up to you. There's certainly some reasons to maybe potentially invest in a company like this, but also, as we talked about from a financial perspective, really not that great. But when the company gives their conference call, they give a lot of color that maybe AMD, maybe NVIDIA doesn't give on their conference call. And the CEO of Supermicro said this about Blackwell, which is the upcoming release from NVIDIA from a data center GPU perspective. He said, I understand Blackwell may postpone. How much? We don't know exactly because the new technology is always what can be pushed out, right? For the Q3, for sure, we do not expect any Blackwell volume. For Q4, I mean December quarter, I guess it will be very small. Engineering sample, small volume. So basically nothing for the rest of this year. So the real volume, I believe, has to be the March quarter of next year. So that's January, February, March. And that's why I foresee only $26 to $30 billion. He's talking about his revenue for, I believe, the rest of the year and into next year. Now, he also gave us color on direct liquid cooling, or DLC. This is obviously the trend a lot of the data centers are moving to. Most of them operate under air cooling. A lot of them are going to move to direct liquid cooling. It's far more efficient, both from a cooling perspective, but also from an energy usage perspective. And the CEO said this, I would say we are prepared the market for a downturn in margins or softening of the margins in our guidance last quarter. So he's talking about the company performance and the fact that their margins this quarter were really, really terrible. And for some, it took them by surprise. But he's saying, hey, look, we told you about this last quarter. And he says, but even we were surprised by the acceleration. He's talking about the acceleration in adoption of direct liquid cooling that we saw in the liquid cooled rack market. So he's seeing a massive acceleration here. And so we had to ramp up our supply chain. We paid a lot of expedient costs, so to get companies to produce the supply chain that they need, and maybe even some accelerated shipping costs and those types of things. And we had higher supply chain costs. So he says, I think as the supply chain improves, we expect those efficiencies to now come back out. But that impacted us more than we expected in the current quarter. Now, with Supermicro, there's always the risk, though. There is some balance sheet risk with this one. It's not producing a lot of operating cash flow. In fact, it was negative. And it's not producing a lot of profits despite the rapid revenue growth. And so the CFO said this on the conference call, and this is really important if you maintain an investment in Supermicro or you're thinking about jumping in. So he said that they announced a $500 million credit line led by Bank of America, and we are really looking and working on our balance sheet and leveraging our balance sheet, which means we're trying to borrow more money, and we expect to have some announcements to be coming in terms of additional loan possibilities in the future. Now, if it's just a line of credit and those types of things, those things hit the balance sheet, not necessarily a positive from an investor standpoint, because given the interest rates, they haven't dropped. Given the interest rate this company has to borrow this $500 million on, it's not exactly cheap. It's not like 4 or 5 years ago where all these companies were borrowing at basically 1 or 2%, maybe even 3% at the most. They're paying a hefty price for this $500 million. Additional loan possibilities in the future could mean other things like share dilution, maybe potentially other types of dilution from a shareholder perspective that wouldn't be good. And the reason why this company has to do it is off of $5.3 billion in net sales. Again, well over 100% growth year over year. Look at your cost of sales, $4.7 billion. Your gross profit sitting at just $600 million. After you clear your operating expenses of $252 million, you have your income from operations at $343 million in the quarter. And look, that's fantastic. If this was a business you were running on your own, that's fantastic. But folks, this is a $30 billion company producing, I would say, just $343 million of income from operations. And I don't think they gave us a lot of color on the conference call. They did talk about this direct liquid cooling, how they had to pull forward some expenses there. But I don't think they gave us a lot of color and a lot of confidence that these margins are going to be turning around. They're going to layer on more bank debt. This is a company that its shares have seen massive slide over the past month, and I think it is worthy, down 45%. 3 months ago, I called this $150 garbage, while we're still a long ways away from that at $508 per share. Right now, I don't have a lot of confidence that this company turns it around anytime soon. Now, a company that I think is going to turn things around is NVIDIA. Now, look, year to date, shares of NVIDIA are still up 111%. Over the past year, you're up 140%. But over the past month, you were down by about 21% on the great NVIDIA company. And some of that is in the spotlight as analysts are lining up just a couple of weeks before this company reports earnings. They'll report it, I think, the last week of August. Mizuho is upping their price targets. And also, analysts are chiming in on the Blackwell delay. That is the upcoming data center GPU that NVIDIA planned to release at the tail end of this year. That looks, again, according to Supermicro and others, to be pushed forward into at the first quarter of next year. Now, SemiAnalysis, which is a Substack that is probably has some free content, but I do pay, I think, about $500 a year to access this. This is one of the premier areas to get very in-depth knowledge on the semiconductor industry. It's certainly worth subscribing to if you want to. If not, I pay the $500. Why? I'm not going to share word for word their research since it is very valuable. I will share with you some high-level oversights to maybe save you a couple of dollars. Now, as reference to the Blackwell design, they say that this is a compute and power density that has never been achieved before. So NVIDIA is trying to do something that simply has never been achieved before. Them and TSM just has never been achieved before in computer. And given the system level complexity needed, the ramp has proved challenging. And ramp refers to the manufacturing of the chips. Now, numerous issues have cropped up related to power delivery, overheating, water cooling, supply chain ramp up, water leakage, and quick disconnects, and a variety of board complexity challenges. While these have sent some suppliers and designers across the supply chain scrambling, because remember, what happens with NVIDIA is they're designing these chips in tandem with power delivery suppliers, copper suppliers, transistors, all these types of things, HBM, memory, everything has to be manufactured, tested, and all combined on a single chip. And so it has everybody scrambling. However, here's the key sentence. Most of these issues are minor and not the cause of NVIDIA's reduction in volumes or major roadwork. The core issue impacting shipments is directly related to NVIDIA's design of the Blackwell's architecture. So we're looking at an architecture delay. It's not really components and little things that go together. It's actually the design of the chip. The supply of the original Blackwell package is limited due to packaging issues at TSMC. Again, this is something that has never been achieved before. So if and when Blackwell comes to market, it will be a technology marvel, but there is always the risk. There is always the risk that they're not able to pull it off. Now, we've already seen that. It was supposed to be delivered sometime in late Q3, maybe Q4 of this year. That has been pushed back to next year, but we've seen time and time again. We'll talk about Intel later in the show. Time and time again, when you try to do something that's never been pulled off before, there's always that chance that it gets delayed even further. Now, to satisfy some of the demand, NVIDIA is doing, I think, probably the smart thing, is they are going to be introducing something called the Blackwell GPU B200A. This is a modified version of the Blackwell, a quote, dumbed down version, if you will. It is also going to be used in the China version of Blackwell called the B200. From kind of a geeky technical segment, it's going to be designed on chip-on-wafer substrate S rather than L, which is kind of a newer version that is something that TSM has tried to roll out. And there'll be some different architecture and form factors that will be changed in this, we'll call it dumbed down or slightly underpowered Blackwell GPU, which is set to replace potentially, at least in the shorter term, the higher end Blackwell that was announced by the company earlier this year. Now, related to all of this is Taiwan Semiconductor. And look, shares of TSM have actually held up very, very well, down 10% over the past month when most of these stocks, like we showed, are down 20% or more. That is because NVIDIA, in their effort to design Blackwell, really don't have any other option other than to get TSM to get it to work. Now, the company saw its July sales surge nearly 45%. Amid AI demand. You also have the tailwind of the iPhone likely getting released here in the next month or two that could spur some even more sales from Taiwan Semiconductor, as I believe a large percentage of their revenue still comes from cell phone chips being manufactured primarily for Apple and others. And so I tell you what, if you have a hot refresh cycle on the cell phone market, well, Taiwan Semiconductor absolutely going to benefit there as well. And the company is likely to raise prices on its 5 nanometer and 3 nanometer nodes. These are more or less the bleeding edge, cutting edge nodes, if you will, from NVIDIA, AMD, and others. Those prices set to rise in 2025. Every time you listen to a Taiwan Semiconductor earnings conference call, they probably get 2 or 3 questions from analysts saying, why don't you raise prices? Your customers are absolutely killing it, i.e. NVIDIA. Why don't you raise prices on them since they certainly can afford it? And it looks like Taiwan Semi is going to pass down some price increases next year. I think you absolutely got to jump in there and buy the dip. Now, a company that you probably don't need to jump in right away and buy the dip is Intel. Over the past year, shares have dropped 42%. Over the past 5 years, you're down 57%. And this is really bad considering almost every other chip stock is up that much just this year. Over the past 10 years, you were down 42% on this one. 6 months, 1 month, doesn't matter what you look at, Intel has just never caught a bid. We saw technically, though, at this $20 level, there might be a bid coming in. Now, some bad news for Intel is they passed on investing in OpenAI in early as 2017. The CEO at the time not really thinking generative AI models would come very soon, and maybe he was right on that. They didn't really come until about 5 years later. But currently, OpenAI's valuation at, I believe, $80 billion in the private market might actually exceed Intel's at the current time. Now, like we talked about at the jump, analysts, if you rely on Wall Street analysts, they are constantly going to be behind the curve. Mizuho, finally, after I showed you the dismal performance of Intel year to date, over the past year, 5 years, 10 years, freaking the max chart actually isn't very good from a total perspective. The analysts finally come in and say, wow, this company needs to be downgraded. As a side note, the CEO did happen to buy some shares in the open market, which sometimes is viewed as a sign of confidence. Now, Moody's also downgrading Intel. We also had Intel downgraded at Argus. Again, these analysts are going to be late to the party downgrading. They're also late to the party upgrading. Intel also going to be the target of a lot of lawsuits. Anytime you have this type of rapid decline in a company this large, the corporate attorneys and the shareholder activist attorneys are just going to pile in there and get their name out there and try to file some lawsuits and make some money. Now, the reason why I constantly want you to look at these financial documents on your own, you don't have to understand them end to end like a CPA. You don't need a CPA degree. You don't need to go to finance school or anything like that. Honestly, you don't even really need to take a course or invest anything other than a little bit of time to understand the financial documents, because if you understand these financial documents, you would have been like me. Look, I don't have any problem with Intel. I've owned Intel products in the past. Intel is actually a short drive from where I live. There's no reason why I wouldn't want this company to succeed. But if you read the financial documents that I've read from Intel over the past couple of years, you would have crapped on this company. I am legendarily known for making fun of Intel and absolutely bashing this company. In fact, some people just tune in to the Intel videos to see me bash Intel and their financials. And if you would have read the financials that I did, you would have been ahead of the game of all these analysts and seen the massive drop that we've seen in Intel shares coming from a mile away. We'll focus primarily today on operating cash flows for Intel. Last year, on a 6-month basis, they had $11.1 billion in cash. This year, they have just $7 billion. I'll show you some of the reasons why. Is their net cash provided by their operating activities, this is just operating Intel, selling their core products, subtracting things like depreciation, subtracting things like stock-based compensation, and other things that are non-cash. Your net cash provided by operating Intel was just $1 billion for 6 months. That is what NVIDIA does like in 2 or 3 days. Last year, it was not much better at $1 billion. Now, if this was a software company, it wouldn't be a big deal. In fact, they probably could be profitable. The problem is this company is trying to become a chip fabricator. And when we look at Taiwan Semiconductor's financials, we see this company is spending tens of billions of dollars, not a year, but every quarter on their chip fabricating business. And so this is who Intel is up against. Yes, I know they're getting some money from the federal government, but that is not going to come even close to everything that they need. Look at your addition to property, plant, and equipment over the past 6 months. $11.7 billion. So when Intel announced that they were going to lay off maybe 10, 15% of the staff, it's going to do absolutely nothing. That is not going to do a thing. They even announced that they were going to cut back their dividend, which again, only about $1 billion over the past 6 months. Even if we add on a couple $100 million in salary, probably not even that much, and $1 billion from this dividend. Again, the gap you're looking for in a lot of these companies, particularly the companies that are not performing very well, is the gap between operating cash flow, which is right here at $1 billion, and their addition of property, plant, and equipment. This gap is really, really wide. And yes, over the last year, you went from 13.3 down to 11.7. But again, this company has investors and even the United States government convinced that they're going to be able to build these fabricating facilities. No, they're not. Over a 6-month period, they have a $10 billion gap in between their addition of property, plant, and equipment and their operating cash flows. I don't think anybody believes those are going to get that much better. On top of that, they don't have $70 billion in cash. If they did, they'd have plenty of runway to get this done, but they don't. And so this company is in big financial trouble. They need to make big changes. Laying off some staff, cutting the dividend is not a big change. They need to get rid of the fabricating business. They either need to spin it out, make it its own separate company, or they need to give up on that idea altogether. Otherwise, this company absolutely could be gone in a short period of time. Now, benefiting all of this, the Blackwell delays, the delays and absolute abomination of Intel's financials, it benefits, I think, one singular company, and that is Advanced Micro Devices. It doesn't mean Advanced Micro Devices is going to create a GPU that is all of a sudden going to take over the world and be bigger than NVIDIA, although if NVIDIA continues to see delays, that is certainly something, although a low probability, it is something that has a higher probability than zero of actually happening. Also, there's a higher probability than zero of Intel actually going bankrupt, probably over the next couple of years. That obviously benefits Advanced Micro Devices, which has its S together, if you will, from a financial perspective. But over the past month, shares of Advanced Micro Devices not immune to the challenges that the semiconductor industry has seen, down 24%. But the company is doing exactly what you want it to do. It priced its new Ryzen 9000 processors cheaper than its previous generation chips. So about $50 cheaper. I saw some YouTube videos. One of the best ways to get insight on processors is just watch the Tech Geeks. There's numerous channels that'll get pushed up into your feed if you start watching some of this gaming and Tech Geek stuff. Watch them talk about AMD compared to the performance of Intel. That'll solve a lot of your technical questions and problems. And the fact that they didn't raise price obviously brings some goodwill to their market. And also, it puts the pressure on Intel, which is already seen in a lot of cases not comparable or just equally comparable at best to NVIDIA from a performance perspective. And now they have to match them from a price perspective. And I just showed you in detail that Intel cannot afford to continue to cut prices. If they continue to cut prices, well, this operating cash flow gets less and less. And this addition to property, plant, and equipment when you're building out fabricating facilities is just simply not going to go down. I said it when we talked about AMD's earnings, is that they should curb stomp. This is the moment you take your foot out, you put Intel's head on a curb, and you stomp on it. And this is what AMD is doing by cutting the prices of their processors. At the same time, they should see expanded margins on their MI300 data center GPUs as NVIDIA has seen delays. Obviously, that should, at the very least, not necessarily increase volumes of the MI300 or increase demand, but at the very least should maintain the pricing. And when we saw AMD's results, they had incredible margins there. Now, another company that is a key to the cog of all of this is ASML. They make, obviously, the lithography machines that go into these fabricating facilities by TSM and maybe eventually also Intel as well. Over the past month, though, ASML is down 20%. Certainly could be a buying opportunity. And the company edged up as it making breakthrough with new chip printing machine with a partner known as Belgium-based IMEC. So they're building this new EUV machine in partnership, and it looks like they made some advancements there. ASML already well in the lead there. Any advancements would keep that lead in a stronghold. Moving over to Dell Technologies relates a little bit to Supermicro Computer. They've also seen their shares down by almost the same amount over the past month. Dell Computer, which reports earnings also, I believe, the second or third week of this month, down about 30%, 38% over the past month. Now, Supermicro, though, had strong results, and that could mean positives from Dell as well. Also, we saw Supermicro's margins actually compress. They blamed it on some of this direct liquid cooling. I think some of it is fact that you have competitive pressures in the market as well. And so Dell could be picking up some business there. And the company is cutting some of its sales team as it's prioritizing around AI, as that just happens to be the hottest thing at the moment. Now, let's move over to the technical segment because this is very important. Shrink this down a little bit. So on the SOXX ETF, which is the broad-based ETF, in fact, I'll keep this out so you can kind of see the ticker symbols. There is an overlay in the background, although it's kind of hard to see. Look, this green line down here, in fact, I'll change this to a purple line just so we can reference it pretty easily. That's the longer-term trend. Anytime you've approached the purple line on the SOXX, tell you what, you have made a rebound. So anytime we move down there, we're certainly going to look to buy the dip on this. Now, more recently, though, over the past 2 years, you've actually been making what I would consider a much stronger uptrend. We'll put this in orange. That's your 2-year uptrend, and look where you're at. You're basically at the bottom here. This was a buy the dip opportunity this week. If you believe this 2-year uptrend is certainly going to break down at some point, we're going to retest these areas, kind of the longer term trend. But in the shorter term, I certainly see it's possible that we could resume this trend. If you resume this trend, you go from 211, probably testing areas up here at 280. That would be kind of a shorter term move, in my opinion, probably an opportunity to take some profits. Again, a lot of you are locked up into these stocks fundamentally for the long term. There's nothing, absolutely nothing that says that you can't also make some shorter term money, pull some money out of these stocks. Since most of them actually don't pay a dividend, that is a way to extract some money, take your knowledge and actually earn something from it. Yes, long term, you are likely to benefit, particularly if you center around the companies that from a financial perspective and a product perspective are doing great fundamentally, but you can take that knowledge and also profit. It's amazing how many investors kind of put out of their mind or think that it's not something that they should do is make money in the shorter term on these stocks, when if you're paying attention to this stuff on a weekly and daily basis, why wouldn't you try to make money all different types of ways? Now, the SMH ETF, slightly different formation. We have a long, I mean, we're talking decades long trend in this one. It is absolutely beautiful. We are sitting at the middle of the trend. Change that to a black line. When you're at the middle of these trends, this is a key area. Middles of trends are a key area. You tend to find some support here, moving back to the top of the channel, potentially another higher high would take you from 224 up to 296. That would be great short-term gain, certainly possible. Further breakdowns, though, in the SMH should be bought. Anything south of 215 on this one probably can be bought. Now, NVIDIA is interesting because we get NVIDIA earnings on the 28th of August. So we still got a ways away. Going to be the last week of August. Going to be a lot of jockeying in my opinion, on how NVIDIA is going to set up. Right now, it's set up at a pretty logical area. There is some support for the shares right about 100, probably psychologically from 100. Also, technically, for NVIDIA, you wouldn't want to see it get too much below 100. Get below 100, and you're absolutely probably retesting the lows that you made back here. Again, this is all split adjusted at about 75. Further down, middle of the channel, it's obviously buying opportunity. We'll wait to see if those materialize, but technically, you wouldn't want to see NVIDIA break too much below 100. Intraday, it has done that, but I don't think we've got really a significant close in a number closer to 95 than 100. Analysts are going to want to try to set this thing up at the top heading into earnings, so we could potentially drift up in that direction for NVIDIA. I don't think there's any reason to believe that the earnings call isn't going to be spectacular, although we saw again this week, Supermicro's earning call was spectacular, and shares, as you'll see here in a moment, absolutely got punished. Now, AMD is actually really interesting technically. I'm going to take off a couple of lines just so it's slightly more clear. We'll change this green line to a purple line. That's your long-term support for AMD. It's been support for a pretty long time, and here we are right on it. I've actually bought this stock a couple of times over the past week, right on and kind of around this purple line, and it's always kind of bounced up. I have kind of sold this one. You don't have to do that, but this is a key area with AMD. Now, if you were scared to see your account go down, which is the case a lot of the times and something that you should always be cognizant of, there are areas you would not want to see AMD get below. I know this is a long ways down, but 95 would really be a line in the sand. Now, 95 would also probably be a buying area. So maybe more specifically about 117. If I bought it here at 134, I wanted to be somewhat conservative and not see this one completely break down, because it is possible that we made a high here, lower high, that trend continues, and we just roll over in the semiconductors. We're really at kind of a critical juncture. A lot of those questions will be answered later this month when NVIDIA reports their earnings. If that stock rolls over, well, it's going to just take the rest of these with it. AMD certainly could roll over, lose this trend line, but if this trend line maintains itself, we should see at the very least a bounce back towards support up at 159. I know that's not huge risk reward, but that's what we're seeing with AMD. Now, Broadcom is another company that we'll hear from later. Actually, it looks like in September 5th. So they're particularly late. They'll report after NVIDIA does. Certainly what NVIDIA does will impact Broadcom to a certain degree. This stock also very NVIDIA-like, setting up at the top of the channel. NVIDIA has good results. This one will probably push back up into the highs. Further breakdowns in Broadcom. This is a premier company. You absolutely want to buy the dip on this one. Now, this chart is so ugly. You must have to put this on a weekly chart because it is so disastrous. Look at that. I mean, this is an unbelievable red candle that you put up on Intel this week, but it did. I've had this green box with Intel on here forever, and we did touch it this week. Just because you touch the green box doesn't mean you need to buy it, but it's the first area where you would expect some support, and you did see some rebounding of shares off the $19 level with Intel. I just don't think you have enough fundamental momentum behind this one to really drive it in the shorter term. From a trading perspective, there can be some opportunities, but fundamentally, I don't like Intel so much that I'm not going to recommend it at all. Now, if you are a trader and a short-term guy, there's certainly some opportunities here. Anytime you put up these big red candles, there's going to be people here on YouTube, on Wall Street, all over that are somehow going to make a fundamental argument for this one. But the bigger and deeper you dig into Intel, the problems, I think, just continue to get worse before they get better. Now, Qualcomm pulling back from its highs after reporting earnings, I believe, last week, although we confirmed a higher high. What you're looking technically is just for the peaks to get higher, and we've just continued to do that really since, I'm on a weekly chart here. This is since 2021, we're making higher highs. Now, this green line isn't really drawn in here for any other reason. We're still over and above the high-end trend, but there is kind of a middle trend anywhere back into the 120s on that one. Certainly can be bought. TSM has held up a little bit better than most stocks. Confirmed another higher high, at least on the weekly chart. We're just making higher highs on this one. Pullbacks in this one, while deep, tend to be short-lived and can be bought. Certainly materialized this week on Monday when this one dropped pretty hard. We're still at the top of the range. Probably wouldn't be a buyer of this one until after you hear from NVIDIA. ASML in its own, a little bit of its own stratosphere as they make obviously the key lithography machines. It is at or close to the middle of this channel. This channel has really been intact for about, that is 21 years, folks. This is I'm on a weekly chart now. I switched just to a weekly chart when we looked at Intel, and I think it is appropriate to almost look at these stocks from a weekly perspective. Folks, that is a 21-year uptrend on ASML. This is why you look at the charts. They tell you so much valuable information. When you approach the middle of the channel, it can be a buying opportunity, which we did earlier this week. This is why I dissect these things. Look at where you bounce. I mean, you literally bounced off this line, and this line can be adjusted a number of different ways. But everybody's looking at the same chart. All the computer algorithms on Wall Street look at the same charts. You chart and code the computers to read these charts, and everybody had this middle area marked out, and we bounced off it. Further pullbacks in ASML can be bought. NXP is actually getting close to a buying opportunity. This is a weekly chart going back about 12 years. We are approaching that. Further pullbacks at NXP, particularly probably, I would say 220 or lower on that one, can be bought. ARM was a stock that I was in and out of this week. Maybe instead of a weekly chart, we'll switch it to a daily view since we don't have a lot of views of ARM. It made this impulsive kind of move down after reported earnings last week, this big green candle. I bought it not at the bottom of the green candle, but somewhere on this green candle. And then we had a nice recovery, ended up selling it up into that area. This purple line is in here tentatively because that was the trend we are on, although we kind of broke and closed. I think the reason why I sold is when you break a trend like this purple line, what you tend to do is come and back test to it. Like the bulls try to get it back onto trend. And this tends to be a fail point. And so that is why I sold, because I was like, if this fails, what's ended up going to happen is you're going to come back down here and make probably a lower low, lower than 98. That's going to be another buying opportunity. There's actually a really nice area probably here above the gap at about 94. That's probably where you want to step in, and we'll certainly alert that to you as we get closer to that area. Currently on ARM, you're at about 117. SMCI looking Intel like you dumped out the bottom of support on this one's looking to try to find footing, but the problem is with SMCI, your consolidation on the stock is down here at like 215, 315. That's why I called this one $150 garbage, because if you made the move at the time, I think it was like maybe $1,000 stock, and people were like, oh, you're insane. Well, now it's $500. If you go from 1,000 to 500 down to 3, the momentum, I think, will just continue you even lower than that. But I wouldn't really be interested in SMCI until you find some sideways consolidation. And the closest area is down here at about 300. So I wouldn't really be interested in that one. Dell looking very SMC-like as well. Look like we've completely rolled over on this one. Should be some support, though, believe it or not, down here at about 60. So Dell also reports their earnings later this month, the day after NVIDIA. Probably will make its move the day NVIDIA reports on the 28th. So this company reporting on the 29th. You got support down here at 60. We'll certainly alert you if we get there. Micron, also in a larger uptrend, will switch back to a weekly view. We'll show you that for the past, maybe 12 years or so, you've been in this trend. I have these light green lines. I'll trade this to black just so you can see it a little bit better. Middle of the channels are turning points, and we saw that we kind of hovered out this level, although it happened to be kind of the end of the trading week, so that could have something to do with it. But these areas you've seen consolidation at the middle of the channels, I think you could actually step in and buy Micron. Just be prepared to dollar cost average as you move potentially lower. Lam Research bounced right off of kind of a technical level as well. You're on about a 3 or 4 year uptrend on this one. Didn't bounce off it to the dollar, but found some support there. I think you could actually probably step in and buy Lam Research here. Maybe not at the price that it's at, but anything probably significantly lower than 800 is a buying opportunity. And finally, Applied Materials, also very similar technical pattern. You've been in an uptrend for 6 or 7 years. We're coming off of the highs. The momentum is lower in this one. you're probably looking maybe potentially by next week's show could be a buy the dip opportunity, folks. That was the Semiconductor show for Sunday, August 11th. Like I said, when the NFL season starts, we'll probably move these to Saturday, although I happen to watch a lot of college football as well. Don't forget to like this video, subscribe to the channel. If you have a buddy or a friend that would like it, maybe share the video, share it on social media. I would really appreciate it. Also down below, there are links to other social media feeds. You can find me, start a discussion with me on X or Instagram. I would love to see you over there. We'll be back later this week. Until then, good luck with your investments.